What do Jerome Powell's comments mean from yesterday during this roundtable when he talked about being quite hawkish? People are expecting at least 3 rate hikes of each 0.5%, May, June, July. That would put the interest rate to around 2%. And what's this going to mean? What's this going to mean for the markets? What's this going to mean for crypto? What does this mean for the general economy? Hey and welcome. My name is Julian. On my channel, in these videos, or on the podcast, whatever you are listening to or watching, I want to address this, discuss this, and share a bit of my thoughts. Obviously, the more expensive money becomes, the harder it is for businesses, for entrepreneurs, for anyone who needs access to capital to access that. And because the more expensive money is, the harder it is to expand. As an investor, you call this almost like a hurdle rate. It's kind of the rate that you as an investor need to beat. If your investment doesn't generate at least the rate that cash makes, you shouldn't be investing, because you would have kind of this risk-free rate already. So this is kind of the hurdle rate here. And so the higher this goes, whoa, what are they doing here? That's a bit tricky. Okay, I need to be careful here. Not that I run over the motorcycle. Okay, should be done fast enough. Good. The more expensive this becomes, the higher the hurdle rate. And so the less attractive outside investments. And so the higher this interest rate generally, markets tend to become a bit more bearish. And we've seen this. So it's quite interesting. Yesterday, this roundtable discussion, then the news came out that Jerome Powell in this roundtable said, hey, it's very likely that we're going to keep hiking. And everyone's kind of expecting 3 hikes of at least 0.5%. Some people even expecting 0.75%. And so if we analyze this now from a total, is the sell-off correct? Is the sell-off wrong? Which asset classes would you go into? I made a long video on how I'm positioned in the markets at the moment, and I'm not gonna so much taking away. I'm not gonna change much on that positioning because I'm actually expecting this, and I think that's the first and foremost thing. Markets did sell off a little bit, but not aggressively, and the reason is because I think most market participants with the big pockets, big money, is kind of expecting interest rates at the end of the year anywhere between 2 to 3%. If we put this in the grand scheme of things, I mean, inflation, reported inflation, right? We're not talking about actual inflation. We're talking about reported inflation is at around 8, 9%. So an interest rate of 2% literally does nothing to fight that inflation. Nothing. Money is still ridiculously cheap. As an entrepreneur, as a business, if you can borrow money at 2%, it's pretty much free. It is. I mean, it's pretty much free. You borrow, let's say, $100,000, you pay back $102,000. If you and your business don't manage to generate at least $2,000, like 2% of profits, you have some issues with the business, right? So basically money is free. So in the grand scheme of things, when it comes to actually fighting inflation, a 2% interest rate is going to do squat. It's going to do nil, nothing, squid. And that is something that most people actually agree with. And that is a big, big, big issue, that these super low interest rates, and we're like even 2%, it's insanely low. I still remember my mother, when I was like super young, so like 30 years ago, my mom telling me that at that point, and again, that brings us into the 70s, into the 80s, when we kind of look back during that time, their interest rates were in the double digits, right? 10, 11, 12%. Totally different story. She told me how she would get on the bank account, she would be getting 10, 11% per year on cash in the bank account. It's crazy if you think about this, right? So a 2% interest rate is nothing. But, and this is now the big but, the relative increase of the interest rate is massive. We're basically going to have a 300% interest rate hike over the next 3 months. And that is massive. And the reason why this is an issue is because if you look at people who have taken out loans at this very moment, so people have taken out loans right now, and let's say they are paying $100 a month for their loans, they can easily be paying $400 by the end of July for the same loan. So the problem about this is that this is not a fresh loan, this is existing, and their income and expenses is adjusted to that kind of cash flow. And that can be extremely hurtful for the existing economy. And that is why so many people, including myself, think a stagflation scenario is actually the most likely scenario at the moment, which basically means inflation is still going to be high. It's very difficult at the moment to get rid of this inflation, especially if you then hear all the stories where President Biden and the current presidency is talking about giving away more money, supporting, helping. And I'm not saying this is wrong. I'm just saying that this obviously makes the current environment even harder when it comes to an inflationary scenario. It's not just the Fed that can cause inflation, and it has nothing to do with Putin, it has nothing to do with COVID. Inflation is exclusively because the money supply over the last 2 years went up by like 40%. And that is where inflation is coming from. And so if they keep printing more money, even if it doesn't come by the Fed, it can come by the Congress, it can come by an executive order, and so on and so on. This is all going to create more and more inflation. So a 2% interest rate is not going to do squat shit for that. But it's really going to stifle the existing kind of loans that are out there, because all these businesses and rental and all these things are going to get squashed with the 300% kind of extra load on their interest. And so looking at all that, it basically just means the exact same thing that I've been saying on this channel and that I keep saying, and that is how I position myself personally. It is all about understanding that people at the moment are very likely going to be more risk off. They're going to feel the rising cost. They're going to feel the cost everywhere. This is not going to change. They are going to feel that they have less and less, and that's not going to get better. Businesses are going to feel the exact same thing. So I don't think most businesses will actually be reporting Tesla kind of style numbers that are insane growth numbers. And that's just because Elon is a fantastic entrepreneur and a fantastic business operator. But most people will actually go the exact opposite. So I do think that the entire analysis that I've been having for the last 6 months, that probably until the end of the summer, we're going to have very choppy up and down. We're going to see more like risk on. It's going to be very volatile. It's going to be all over the place. And you're going to be wanting to be investing in solid businesses, cash flowing companies. You want to be diversified. You want to be in crypto. You want to get cash flow in your crypto. You want to be in commodities and precious metals. Because we're going to see, in my opinion, a scenario where inflation is not going to come down, but the economy is really going to struggle. And you will also see, if you are in many of those really broad ETFs, these ETFs are also going to struggle, because so many businesses will struggle in that current market environment. So it is as crazy as it is, but at the moment it is a stock picker's game, and you have to be in very, very, very solid companies. You have to be in companies where you're like, if I would own the entire business, and this business would get delisted from the stock market, so there's no more price, I just own that business now, would you be okay in owning that entire business? And these are the types of businesses that I would love to own at the moment. So these are my thoughts on that. Let me know what you think. You can let me know in the comments down below. Let me know if you have any questions. And other than that, hope you subscribe, click the bell icon, like the stuff, share the stuff, and then I'll see you next time. All the best, stay safe. Yours truly, Julian. Bye-bye.